Article 50 will finally be triggered on Wednesday. A letter formally written by Theresa May will be delivered to Donald Tusk, the President of the European Council, firing the gun for Britain's two-year Brexit journey. Nick Parsons of National Australia Bank is here with you now to explain the market reaction perhaps to this, because at the moment we're witnessing a wait-and-see approach. There's not a great deal going on, is there?
Well, there isn't. Today's been one of the quietest days that we've seen in markets for some weeks. The first thing to make about tomorrow is that we know it's happening and we know precisely what the end result will be, that Britain formally gives notice to trigger Article 50. So there's no surprise whatsoever in the headlines. So we don't have that to concern ourselves with. What I would say the way to trade this is to trade the form, the content, the context, the look and the feel of the whole letter. Now, there's various debates around that suggest, is it going to be a tense, terse, 3-paragraph, we're leaving and hereby give notice and we're gone in 2 years? Or is it going to be a 6-page document outlining the areas for conciliation, the hopes for agreement and some coming together? In other words, is it going to be an amicable divorce or is it going to be a costly and bitter one? And I think it's that tone that's really going to be important for markets. So yes, we can trade headlines, but I don't think the headlines themselves are going to tell you what you really need to know. So look at the length of the document, try the look and feel, look for the soft edges of the document rather than the hard facts.
Okay, so we really need to dig into the detail on this one. And sterling, what can we expect from this one? Because it's been a tumultuous week.
I think the trend for sterling still does remain down. As ever with currencies, it's impossible to buy or sell a currency without buying and selling one on the other side. So we always have to kind of be very wary about what currency we express the view against. So I do think the trend for sterling is down, and we've seen sterling a little bit lower against the euro over the course of the last 5 days or so. But of course against the dollar, we're a little bit higher. So this time a week ago we were 123. Overnight we've just poked above 126, and here we are somewhere in the mid 125 60s, that kind of area. So I think we should be wary about selling sterling aggressively against the dollar in the very near term, because a lot of the Trump trade has still got to be played out, as it were. But I do think that playing sterling from the short side against the euro is probably the way forward, because one thing we have seen is that the economic data in Euroland is improving substantially. And the more the data improves, tying this right back to Article 50 and the negotiations, the more the Eurozone data improves, then the harder stance can their negotiators take. Because, of course, they will need Britain at the margin a little less if the Eurozone is growing strongly. If the Eurozone were still flirting with recession, there were still worries about breakup, and there were all those previous concerns were all still there, then they would certainly want the UK as a trading partner, and they'd be doing all they could to try to keep the UK on side. But the better the data looks out of the Eurozone, the more that from that side of the fence they can be tougher in their negotiating stance. So perhaps it is the case that playing sterling short against the euro is perhaps a better one in the very near term than playing it against the dollar.
Okay, I appreciate that the economics out of Europe have been better, as you say, but what about the politics? Because that's still messy.
Politics has been an ongoing event theme for foreign exchange markets throughout the first quarter and indeed the first half of this year. But if the latest opinion polls are correct, and you would have seen the biggest ever 2-letter word, if the latest opinion polls are correct, and if it is the case that Marine Le Pen either doesn't get to the second round or is heavily defeated in the second round of the French presidential elections, then political risk fades very quickly into the rearview mirror. And then there's almost a clear run right up until September, or October when we get the German federal elections.
Yep.
So that political risk which has been holding people back from buying the euro will dissipate as a theme once the first or the second round of French elections are gone. And I think we are starting to see, you can see it in the bond markets, you look at the spread between France and Germany, you look at the euro itself, which has gone up against a whole range of currencies over the last 2 or 3 weeks. It looks as though that might be primed just for another little leg higher in the near term.
And of course the Dutch elections didn't go in the far right's direction either.
Absolutely, there was no read across, if you like, from Holland into France. You're
And the polls were
right.
actually right that time, believe it or not.
Yes,
For
and the one election which was perhaps hardest to call. I think there were 6 different parties that scored double digits in the opinion polls, and yet there weren't more than 1 or 2% out for all of them. It was a spectacular success, and a rare one perhaps for the opinion pollsters.
Yeah. In terms of the markets tomorrow, so
Yeah.
we've spoken about sterling, euro, US dollar. What else do you think you should keep your eyes on, and what's going to be moving around this triggering of the Article 50?
I think once the Article 50 is triggered tomorrow, we're going to see later during the day perhaps some outlines for the wall that President Trump is planning across the Mexican border. Now, the president there is in need of a quick win after the embarrassment of last Friday's pulled vote in the House, and with tax reform itself still being some way distant into the future, a president who's looking for a win perhaps might need to focus on something quick, easy, visible, tangible. Not that a wall of that length is going to be something that's easily constructed, but it's easily explained, everyone can understand it, and if we're going for a quick win, let's see if he can get back on track with at least some of his policy agenda. So we've got that later in the day, tomorrow, probably some proposals coming out around that.
Okay.
So it's...
And the Trump trade might be back.
And the Trump trade might well then be, because after all, every other dip that we've seen in equity markets has been bought. Is this the one that won't be bought, or is we going to see more of the same? We'll know fairly soon.
And I think this conversation just proves how interconnected the global markets are, because we're talking about triggering Article 50 and Donald Trump and a Mexican wall, and they work together.
Absolutely. Everything is interconnected and everything is very highly correlated at the moment. Absolutely.
Right, Nick Parsons, thank you very much indeed. Talking to us today from National Australia Bank about the triggering of Article 50. It's finally going to happen on Wednesday this week.